Hello and welcome to the channel. Hope you guys are having a fantastic day. Today we're talking about a CANO Health stock. The ticker for the stock is CANO, CANO. And it's a healthcare stock. And I'm going to go a different aspect of the stock. I'm going to talk about the fundamentals, which is financials. And we're going to talk about the technicals as well. Because I think a good combination is always the fundamentals and technicals. We cannot ignore either or. A person who's just doing the fundamentals, saying what the company's doing and how much revenue they're generating and all that would not really be successful. Because at the end of the day, you need technicals. You need to know what other people are thinking about the stock. What do they think about the supply and demand, right? So that also is a very important indicator. So we're going to talk about the technical at the end. First, we're going to talk about the company and what the catalyst that came out for the company, right? So the CANO Health breaks ground records. So they're coming up with a new complex in Florida area. And this is where they're going to do like the cardiovascular program, diabetes management, arthritis, pain. So it's going to be a big sort of like a hospital type complex, right? Where they're going to have different areas of diseases they cover and so on and so forth, right? So this is the catalyst that came out on May 26th. Stock is up 4% on an after hours when it closed on Friday. And again, we're off for Memorial Day, so Tuesday is going to be another trading day. So then we will find out how the stock does, but we're going to talk about the chart in a second. So as far as the market cap is concerned for the company, it's about 1.18 billion. So it's fairly okay large company. And on average, the stock that are traded for the company is about 3.7 million. On close of business day Friday, they traded about 2.4. It's a little less than they would do usually. In a 52-week range, the highest that went is $16, and the lowest that got is $3.81 in 52 weeks. Okay, earnings per share is negative 67, which means they are currently not very profitable. On the balance sheet, the total assets they have is about 2.1 million, and everything you see here is going to be by thousands. So you take 2.1 million times thousands to become 2.1 billion. Total liabilities about 1.3 billion, and total equity they have about 798 million. Now, which is fine. It's a large healthcare company here. So operating cash flow is negative 151, which means their operations currently is not successful. However, it is a little greater than 2019. So, certainly they are, making progress. They are investing in different lands, etc. So they're trying to grow. As you see here on the investing cash flow is negative 1.1 billion. They purchased land. I think this is where they are trying to build this new complex. I think that's what the investing cash flow came in. Institutional banks own 74%. And now these institutional banks are the big names, and 88 of them got into the position about 28 million shares, and 35 of them recently got into the position 9.4. However, there's a little bit more selling, but they still own 74%. Now, they believe in the companies. That's why you see a greater number of ownership here from the institutional banks, okay? As far as the analysts from these firms, these six firms that we have listed here, 7 firms, they feel it's a strong buy, and they think the average price, the stock should be around $9.43. Again, you got to take this a grain of salt. You got to take this information and always make your own judgment. So let's look at the technicals, right? Let's look at the chart. So on the chart, the stock actually went down to $3.81, and this is when they had the earnings call, and also the market was also coming down. They went down to $3.81. If somebody would have bought it here, it's a $3 play. It went all the way up to $6.13, and now it started coming back down. Now there's a couple of support and resistance I have here. There's a little bit of a support right here that it could either bounce off of and go back to $6, or if it crosses down, it could cross down to $4.70. If it does, of course, cross $4.70, it could still go back to $3.83. However, but given the fundamentals that we know, we definitely know the stock has potential. There's a lot of investment from institutional banks, so that's why it's a stock that I want to have it on my radar, right? As far as the EMA is concerned, exponential moving average, it's basically sort of coming down. So it looks like it is heading down right now. RSI is also below around 50. Anything below 50, I feel like it's on a downward shift. And MACD, which is moving average convergence and divergence, which also sort of heading down. So I feel like there's a little bit of a momentum that's going to come down. Maybe bounce off of $5.49 and then head back to $6. And if, of course, it crosses $6.11, it could go down to $6. It could go up to $6.95. As far as the ATR is concerned, which is the average true range, now the stock moves around 50 cents a day on an average. So and it's $5.50. So it could potentially go down to like $5 or so, and then it could bounce back up to $6 or $5.50. And of course, there's a couple of support and resistance that I draw up here. The lowest it could get to $3.80. Before that, it's $4.70, $5.26. or if it goes up, it goes to $6.15, $6.95, and after if it crosses $6.95, it's essentially, it could go up to $7 or $8 for that matter, because there's nothing here that is, I didn't see anything when I was doing the analysis that could sort of stop the price at, maybe it could stop at $7.70 because, I see some resistance right here, but that is something to see. But again, look, the objective here is to get you guys this information so you can have it on your arsenal. And if you see the stock pumping or you see the stock coming down and to the levels where it looks nice and healthy and you think it is, is going to give me $1 or $2 play, I'm definitely playing that stock. So definitely something to keep on in your arsenal, and then something that you should be having on your watch list. And when their levels are right, if it comes down, for example, for me, how I'm going to do is, this is not a recommendation. It's not, it's just how I'm going to do it. Let's say if I see it come down to $4.70, I will buy a few shares and I will sort of, average dollar cost in right at that point. And then if it comes down further, maybe I'll buy a few more shares, because I know eventually the stock is fluctuating between these levels, and and it might consolidate a little bit, and then either it goes up or going down. But you have to play it. Either you have your stop losses set right. Nobody can predict the future. Nobody can predict the market. People will, say anything to get you on, but there's nothing anybody can predict. Okay, there's possibility and probability. The only thing, one thing that people can 100% tell you is that there are patterns that you follow, and that will happen. For example, if you see a support right here, for example, and it bounces off of that support, when it comes down, there's 100% guaranteed that it would bounce off of that support, because the fact of the matter is there's a lot of robotic trading is going on. There's a lot of limit orders kicking at this point. So this is going to definitely push the demand higher, and the price is going to go higher. And then, certainly you have a stock going up, and then maybe it gets rejected right here. Maybe there's a lot of profit taking happens here. So there's, so that happens, right? When you see a chart, when you do the analysis, you see certain candles closing, you understand that, yeah, this is definitely going to happen. But if somebody tells you that it's going to start right here and stop right here in like 2 days, it's bluffing. There's nobody could tell that. There's probabilities are endless. Only thing you can tell is there's a support or resistance that either is going to cross up or down. And when you play a play, you got to have your stop losses either direction. If you feel that the bars are closing is bearish, for example, I say right here, okay, this bar is closing in, it's a dodge right here, like it's a doji, right? Like, for example, it's basically nor is winning nor is losing. It ended in red. But there's a possibility that could just turn green, right, on Monday, because there's a slight upper hand on the bearish side, but it could turn tables on you on Monday, right? It could certainly turn into a green candle. Somebody, come in and they buy, as institutional banks come in the dark pool, they come in and they buy a massive share, and then you certainly have a green candle. And you were thinking, is it going bearish? That's why these indicators help, where indicators, you got to take it as a grain of salt as well, because again, they're not 100%. Indicators also are like lagging a little bit. So what you got to understand is you got to have these support and resistance levels, and when you play them, you have a conviction that, okay, it's going down. You stick to that conviction, but you set just stop losses, right? It started going up. A lot of people that I've seen that what they do is when they started going up, they're like, oh, you know what, it's going to come down. Let me just hold on to the trade. And then, let's say, for example, they were shorting the stock and they keep going up and they keep losing money. Or if they were buying the stock and the stock is coming down and they don't have a stop loss, and then it comes down to $3.81, and then it goes down to $2, $1.99, they're losing a lot of money. I think it's always better to have a plan, always have a stop loss. No matter, you'll come back to the trade again. And I would recommend anytime you get into a trade, always have a stop loss, no matter how how much conviction you have on a stock. But again, this is just what I do. No matter how much conviction I have, I always have a stop loss. I'll come back to the trade again. My threshold is 10%. If it goes below 10%, I'm out of the trade. I'll come back to it again when market feels more, where I can make money. So either way, this is my just quick advice for you guys. If you are getting into any stock, any position, always have your stop losses. Never get into it and just diamond head everything, because this is not how market works. That becomes a pure gamble and lotto, and then you end up having a red on all your positions. That's what generally happens. So have a red, have a stop losses, come out of the position, think about it again, get into it. No matter how many tries it takes you, but you got to have a plan that you want to move forward with. You cannot just go in and just throw in the money and just hope that, oh yeah, it's definitely going to go up, and then that will sometime it work out, but then it becomes a little bit of a problem where you will be a loser a lot than you're winning. So anyway, so hope you guys like this video. If you did, do give it a thumbs up. And the objective here is to get you guys information early and come up with these different plays that are sort of on the back end. A lot of people not talking about it, and so you have an upper hand. If you have the information handy to you and you see the stock pumping, you could just jump in. So definitely talk to you guys later.